All right. So today we are going to new topic. All right. So it means that we have covered. All right. Your employment income. So what it means that is that now you have actually have your section 4B income. Yeah. So today we are going into other section, which is section 4C. We're going to look into your dividend income first, followed by your rental income. I hope that we do have enough time to cover two topics today. All right, so please bear with me, and I hope that I can finish well, at least 1.5 topics, yeah, if not two. So let's go into your textbook, which is in chapter 8, yeah, dividend income. Can you see? Oh, I'm not sharing yet. I have to apologize because I have an ulcer, so uh, I may have some difficulty to talk. Ya, tengoklah difficulty yang sangat kan. Okay, so are you here then? Dividend income. Can you see my screen now?
Yes.
Alright. Alright. So dividend income. Remember which section is this? DID, dividend interest and discount. Which section?
Foresee, madam. Foresee.
Section 4C, right? So always remember DID is 4C, 4D is RRP. Yeah. So under section 4C, dividend, interest and discount, those are the topics, right? But we will only go very detailed on your dividend income and your interest income. And under section 4D, you have rental, royalty and premiums, but we only cover two, which is royalty and rental. All right. So dividend income here. Dividend income, dividend itself is not defined in the Income Tax Act. So generally, dividend represents distribution or payment out of profits. Okay. So when you have a dividend, it means that the company is actually paying something amount, all right, an amount to the shareholders. So the payment is out of their undistributed profit. So in accounting, you do your accounting statement of comprehensive income or your profit and loss account. From your income minus all expenses, you have profit for the year, right? And this profit will go into what we call a retained earnings. Yeah, so the retained earnings is the income which is undistributed. And every year the company have to look into their retained earnings. What is the opening balance of their retained earning account plus the profit, and they will decide whether they want to make payment of dividend to their shareholders, right? So payment of dividend is actually taken out from the retained earnings account. Yeah, so it's not part of your statement of comprehensive income, but it's part of your retained earning. Yeah, so the retained is the undistributed profits, right, to each shareholders. So what we are talking now here is that who is actually receiving the income. We are talking about the shareholders that actually receive the income. Yeah, company make payment of dividend, but the tax is actually on the shareholders, because the shareholders is the one that receive or accrued or derive the income. So the tax is on the shareholders. How much is dividend paid to the shareholder depending on their shareholding ratio? How much normally dividend is paid per share? For example, RM1 per share. So if you have 100 shares, then you get RM100, for example. Yeah, right. It covers any distribution of profit made by the company to each shareholders, whether in money or others. All right. They could give that the company do not have enough money, but they do have other assets, for example. All right, so that the distribution of those assets to the shareholder is also fall under dividend, right? However, it does not cover any return of paid up capital, right? So it means that if you the company paid back for the capital invested, then that is not a dividend. Alright, effective from 2014, Malaysia operates fully on what we call dividend single tier system. Right, single tier system. Prior to 2015, we call it an imputation system. Yeah, so let me write it down here. Prior to that is Saya jadi kecil sangat ni. Biar betul. Imputation system. Right, prior to single tier system, which is prior to 2014, Malaysia was on imputation system. But now we move to single tier system. So later we look into more detail. What do you mean by single tier system? So under single tier system, it says that all Malaysia derived dividend is now tax exempt. So I'm a bit disagree with the statement here. Alright, so when you say tax exempt, it means that you don't have to pay tax on the dividend income. But that's not what is actually happened. So normally, alright, if you are in my class, you know that I normally don't say that the dividend income is exempted, because later you see that it's actually being taxed. It's just not is tax at source. Alright, so normally what you have to write here is not tax exempt. Whenever you have dividend income, later in your tax column you have to put it as final. Jadi ketak ni, right? Mana dia ni? Final. Alright, I want you to write your dividend income as final rather than tax exempt dividend. Ya, mana lah? Mana ni? Tak tahulah. Right, remember that is a final dividend. Dah lah kecil benar. Okay, final dividend. So later we look into what it means here. Okay, what is the characteristic of dividend? The source of fund. Dividend does not lose character as income merely because it's paid out of capital fund. Right, such as capital profit or long-term investment or in specie such as shares in another company. So some companies that can actually give their shares in another company as part of a dividend. So it does not has to be in monetary form. Yeah, it has to be examined in the hand of shareholders to determine its taxability. So remember that this one again, it said that dividend need not be in cash. Alright, it could be in kind or in specie. Right, involve a reduction of the asset of a company and increase the wealth. Why a reduction of asset? Because if the payment is paid a dividend, cash dividend, then your cash will reduce, and then you also have to pay out your dividend. In order to pay out your dividend, you reduce your cash. Alright, and dividend, if you look into the accounting, dividend is actually part of your honest equity. So if you make payment of your dividend, so you reduce your asset in the form of cash, for example, and you also reduce your honest equity in the form of dividend. Right? Alright. Even though the company make payment of dividend, alright, the shares in the company remain intact. Alright, so because they don't pay dividend from the shares, it's paid out of the retained earning or undistributed profit. Capital versus revenue is dividend is a capital or revenue. The payment is made out of profit of the company is income. No statement of the company or director can change the status of the dividend. Sometimes they say that, okay, refer to the minutes of the company meetings, or I say that, we try to exempt the dividend. No, it's not. It doesn't work like that, right? So most of the time, payment of dividend in the hand, dividend received by shareholders is taxed. It's not exempted yet, actually. So let's look at it. Kaya Wang Berhad is a holding company, shares quoted on the main board. Financial position, you have investment in subsidiary, quoted investment at market value, bank and cash balances. So this is your net asset of the company. And you have share capital of 56,000 and undistributed profit of 64,000. So you know that the total asset must always equal to total liability plus honest equity. Right? So this is very basic of your accounting equation. The directors wish to return some of the surplus asset to shareholders and have considered distribution of asset. Yeah, distribution of asset in specie by distribution 10 million in quoted shares. So here you nampak quoted shares dia dekat sini. Right? But how much you want to distribute? You want to distribute 30 million cash to dividend on ordinary shares. Alright, so it means that rather than they pay out dividend, they pay out in the form of quoted investment of another company. Alright, advise the director on the tax implication of the above proposal. So you have to see whether the distribution of asset here to the shareholders will fall under dividend. Alright, dividend paid, credited or distributed by a resident company are exempt dividend income in the hand of shareholder and are deemed to be derived from Malaysia. It was held that a limited company not in liquidation can make no payment by way of return of capital to its shareholders except as a step in an authorized reduction. Any other payment by means of which it will part with the money to its shareholders must and can only be made by way of dividing profits. So it says that here, the payment of cash dividend of 30 million, which is from the quoted shares, are exempt dividend under the single tier system. Again, I do not agree here, right? It's not exempted, yeah. Later we look into it again. The textbook always use the income or is exempted, but I want you to understand that later you see that the income is not actually exempted. Right, a distribution of asset in specie has been held to be income. Then the shares is however exempt dividend. So again, they say that it's an exempt dividend. So what happened here is that because single tier on 2014. So what is this actually is that I will explain this later. All right, I just want to show you the difference between exempt dividend and a final dividend. Alright, some companies also give them bonus shares. So bonus share means that because the company give additional shares to the shareholders. Alright, because they cannot pay out dividend, they give them bonus shares. So if, for example, for every shares that you have, you get 0.5 shares, for example. Yeah, so that's how what you call bonus share. But again, bonus shares are not dividend income. Capital reduction is not income to the shareholders. And then for IRB practice, company which undertake to reduce capital by way of capital reduction scheme requires sanction from the High Court. Unless the scheme is carried out with the object to avoid tax and does not satisfy the commercial justification, the tax authority in general would accept the distribution of capital from the company to represent a capital payment and not dividend income. Yeah. Right. Uh, So division, okay. What about if the company goes into liquidation? Right, when the company goes into liquidation, they will distribute whatever asset that the company has to their shareholders. Alright, if the company are not able to pay back the capital invested by the shareholders. So pursuant to a liquidation scheme, it says that whatever is distributed from the liquidation again is not income to the shareholders, so therefore is not taxable. What about your right issue? Right issue means that you are given shares, existing shareholders are given the option or the rights to purchase shares of the company at a lower. Remember share option when we do your um, last time share option under employment income, but that one is to the employee. But this one is given to the shareholders of the company. All right, the right issues to purchase at a lower premium, and again, therefore, is a capital transaction. Therefore, it's not taxable. Share buyback. All right, confirm that when a listed company buys back issued its own shares, it will not constitute a distribution of dividend. All right, it has to be legislated. Classes of income. So remember that dividend is assessed under section 4C, all right, as an investment income, but all right, it can also fall under section 4A as a business income. So how can you have dividend income under section 4A? So later we look into that, right? But most of the time, your dividend income, which is received by company or an individual, because they invest shares in the company, in return they receive dividend income. So most of the time, the dividend income is assessed under section 4C, right? Again, it's keep on mentioning that the income is tax exempt, right, under single tier system. So for those who actually attended my class, right, I will always explain it's actually not exempted. What it means here is that no deduction of tax is required when companies paying credit or dividend to its shareholders. Oh, ini dia kata ni pula. No deduction of tax is required when companies pay credit or distribute Malaysia derived dividend to its shareholders. Now kita tengok balik. Alright. So remember that why for every income, alright, for your employment income, for your dividend income, for your rental income and royalty income, so you must know because the section 3 says that income derived in Malaysia only taxable. So you have to look at the dividend here. In this case, dividend, whether the dividend is derived in Malaysia. If the dividend is derived in Malaysia, then only it will be taxable. In fact, the accessibility of dividend income, whether it's deemed derived from Malaysia, so sometimes they call it as a deemed derived, yeah, would depend on the resident status of the paying company. So it means that if you receive dividend from a company which is a Malaysian resident company, all right, therefore the dividend is deemed derived from Malaysia. Right, so you only look at whether the company is a resident status company. So what we have covered here, all this one is resident status for an individual. All right, resident status for an individual, but now we are looking at the resident status of a company that is actually paying out the shares or the dividend. Right, if the company is a resident company, then the dividend received by the Malaysian or by the shareholders are taxable, are deemed derived in Malaysia. It's under section 14 where it says that where a company resident for the basis period, right, credits or distribute dividend, then the dividend shall be deemed derived from Malaysia. Where a company resident for the basis year was not resident for the basis year for the year immediately preceding the YA, only dividend paid, credit or distributed in the year. So sometimes remember the resident status of company may also be this year is resident, maybe this year is not resident, but the current year is a resident. So even though the previous year he is not a resident, the company is not a resident company, but in the year that they distribute the resident and the dividend, the company is a resident company. Therefore, the income is derived in Malaysia. So how do you decide on the resident status of a company? We are looking at the management and control of a company. Mana pula datang benda tu? Right, management and control of a company. So how do you know the management or control is evidenced by data? So when you say again, alright, resident status of company not based on the number of days company is in Malaysia. No, that is for individuals. For company, you are looking at the management and control. So whenever I say that, what is the resident status company? How do you decide on the resident status of company? It's always management and control. So normally, how do you say whether the company management control is in Malaysia? Normally, is evidenced by directors meeting. So as long as you say that, okay, the directors meeting are held in Malaysia, it doesn't have to be every time, but at least one time or at least once in Malaysia in order to hold the company to be tax resident. Alright, so for company, we don't actually tax the resident status every year. But once you are a resident company, then it's assumed that you are a resident company for the following years of assessment unless otherwise stated. Right, is that clear? Once a company is a resident company, based on the management and control is in Malaysia, then the company is a resident company. So how do you see the management and control? Normally they look at whether they do have the directors meetings held in Malaysia at least once, yeah, throughout the year. Alright, management control is exercise Malaysia. So you look at 2018, 2019, and from there, this one is about 1 year period, and you only have one time where the directors meeting is exercised, for example, here in Malaysia. So because of the one time management control is exercised in Malaysia, then the whole year here, YA 2019, right? So how you decide on the year end here, you always refer to the closing here. So the closing, you start from 1st June 2018. This is the basis period of the company. All right, so 1 year is the basis period and it closed on 31st May 2019. And this one is actually referring to your year of assessment. Alright, YA 2019. So for YA, tu kenapa lah jadi macam tu? I think something is wrong with my PDF. Alright, YA 2019 refers to the basis. The basis period is actually we refer as a YA 2019. So any dividend paid distributed or created on 14th of February onwards are deemed to be derived from Malaysia. So actually we're looking at in this case if, alright, in this case if before this you are non-resident. Alright, but if you're already a resident company, so normally we assume that you are a resident company. Alright, management control is not exercised in Malaysia. Alright, any dividend paid created or on over are not deemed to be derived because you don't have any control in Malaysia, not exercised. Alright. So in short, dividend would be deemed to be derived from Malaysia if at the time of paying crediting, the company is a resident company. Alright, deduction of tax from dividend. Effective from 1st January 2014, company is effectively placed on a single tier dividend system. Any dividend paid, credited or distributed under single tier will be tax exempt in the hands of the shareholder. In the hands of the shareholders. Alright, again, any dividend paid, credited or distributed under single tier system will be tax exempt and in the hand of the shareholders. So it means that the shareholder don't have to pay any more tax. Right? That's why it said it's called exempted, but actually it's not exempted. Yeah. Mana ni? Right, assessment effective from 2000. The basis here is actually looking at the YA. So we look at when is the dividend is made. All right, it paid out, so that refers to the respective. So you have to know the basis period of the company lah, right? But if you're talking about the one who is actually receiving the dividend is an individual, all right, then when you receive the dividend is the year that you're going to tax you accordingly, right? And individual is always 31st of December year end. All right, date of payment. Where the dividend income is deemed to be derived from Malaysia, such dividend will be accrued to the shareholders on the date of payment or when the cash or cash equivalent is posted or delivered by the company. So you're looking at the date of payment, right? So whenever a company wants to pay out dividend to their shareholders, all right, it's not immediately decided. All right, it has to be brought into the board of directors meeting. All right, a proposal of the dividend paid out. All right, and then once it's proposed, it has to be approved by the board of directors. So sometimes in one meeting it's only proposed. So once you propose, it means that you will not. It has to be approved. But once it's approved, then only we take it as a payment. So when is the date of payment? So you look at information lah. So we're going to tax you based on the date of payment. Right? It has to be, the recipient must have control over the money. So it means that if you have control over the money or funds, then only it will be taxed on them. Right? For example, let me inform you the following, and AGM is 1st of November. Dividend is payable on 31st of December, and that it actually paid on 14th of February 2019. So you have to decide for all these things, which one is actually the dividend is receivable. Right, it will be based on calendar year 2000, based on the dividend payment, which is 14th of February 2019. So dividend is paid in 2019. It means that it will be taxed in 2019, even though it's payable in 2018, but you don't have control over the money yet because the money has not yet been paid to the shareholder. So we only assess in the year that you have control over the income. All right. The date of receipt by the shareholder is of no. Alright, so remember that. Alright, even though it said that you actually pay on 14th of February, right? So if it's a normal, now it's online transaction, alright, you only pay dividend, you credit the accounts of the shareholder, so it's immediate, no problem. But previously, alright, they have some time lagging whereby the company paid a dividend, alright, they issue a dividend voucher to the shareholders. So the dividend voucher is then posted to the shareholders. So upon receiving the dividend voucher, all right, then only you can, it means that it doesn't matter when you actually receive the dividend voucher, but you have to look at when is actually dividend being paid by the company. All right, deduction of expenses. With the implementation of single tier system, dividend income derived from Malaysia would be exempted from tax. So it means that, okay, you keep on mentioning and exempted, it's okay lah. So whenever you have dividend income, it's very easy. You just put, okay, whenever you have dividend from Malaysia resident company, because of the single tier, you put exempt or actually final. Yeah. But if you receive dividend from outside, right? For example, you have investment of shares in Singapore, and then the Singapore company issues you the shares. All right, in this case, remember that the Singapore company may not be a resident company, so the shares is not actually is not derived in Malaysia. All right, so when the dividend is not derived in Malaysia, then will not be taxed in Malaysia. All right. On top of that, remember that income received from outside Malaysia is also exempted. So if you receive any income from dividend from outside Malaysia, you can also put it as exempted. Yeah. So once you have that exempted, so for example, if you have any expenses incurred in arriving to your dividend income, so those expenses you cannot deduct anymore. Okay, what it says is that like this. Assuming that a company, all right, borrow money, all right, 100,000 ringgit from a bank. All right, they borrow money from the bank, and then from that 100,000, 80,000 or 80% of the loan is used for business purpose, and the balance 20% is used, all right, because they say that they don't want to use everything, so 20% of the loan, which is 20,000, is used for investment in another company. Right, so they use 20,000 to invest in another company, and after some time, then they receive a dividend income from the investment in another company. So the dividend income here, right, is of course is in the section 4C. But remember that in getting the loan from the bank, there's an interest on the loan, right? So you get 100,000, assuming the interest is 10%. So you have to pay 10,000 ringgit for the year for that interest expenditure. Right, for the dividend income, you have interest expense there. But because under dividend, all right, whenever you have dividend income, it's already exempted in the tax computation. So any interest, for example, in this case, the 10,000 interest, 10,000 means that 8,000 is for business purpose, 2,000 is for to be deducted against your dividend income. Yeah, because you have to allocate the expenditure according to how the money is being used lah. So in this case, 80% is used for business, so the interest will be charged on the business income. The other 20% should be charged on the dividend income. But in the computation, because under single tier, your dividend is already exempted, so any expenditure that you have, you cannot deduct from the dividend income. Otherwise, you have exempt, then you have minus 2,000. Right, so this 2,000 cannot be deducted anymore. All right, it's just that is disregarded lah. Yeah. So any deduction or expenses incurred in relation to the dividend will be disregarded because you dah exempted at the top. Yeah. Okay, foreign dividend received by specialized industry. So did I mention about BISA? Have I ever mentioned about BISA? What is a BISA? Anyone? Banking, insurance, shipping, airlines. Yeah, so these are the BISA. Right, BISA. Buat besar sikit lah. Okay, so when I say BISA, alright, these are what we call specialized industry. We covered that when we do your chapter 1, right? First week when we have specialized industry. If the business is in BISA, which is banking, insurance, shipping, and airlines, so the income is not based on derivation. The income is a world scope income. It means that wherever the income is received, it will be apa nama dia? It will be taxable. Yeah, because this business, the nature of the business is that it is not in Malaysia only, all right? It moves around the world, all right? Banking, all right, with all this insurance. So you cannot have a limit, all right, income derived in Malaysia only. So that's why they have this what we call specialized industry. All right, but effective from 2004, any person other than specialized industry receiving foreign source dividend will be tax exempt. So remember that 2004, any foreign income is exempted. But for BISA, right, wherever income derived will be taxable, right? Only resident special industry, which is BISA, would be subject to Malaysian tax on foreign source dividend. So even though it's a foreign source income, right, because BISA, the nature is wherever income is derived will be taxable. So that's why will also be taxed on this company, right? Is for income received in Malaysia from outside Malaysia is taxable. In the event that the foreign dividend income suffered foreign withholding tax, all right, later we look into this topic when you do your tax 2, your bilateral and unilateral relief is available. So it means that they do give, for example, if it's a BISA company, for example, we're talking about banking and they have investment in another company in outside Malaysia and they receive dividend from there. And if the other country, all right, have actually taxed you on the dividend income, so when you compute your dividend income, because it's not exempted, because why they are BISA. So it's not exempted, so we tax you in Malaysia, but we take into consideration tax that you have paid on the same income in other country, we give you as a deduction. Alright, so that's how we help you to reduce the burden of tax. So this is what we call, have you heard of double taxation? Alright, so if you have one income, in this case talking about income by BISA, alright, if you receive from outside country, then the other country may have tax on the income. So when the income is taxed in Malaysia, we give deductions on the income, on the tax that you have paid outside Malaysia. So later we do that when you do your tax 1 lah, right? Sorry, tax 2. So this is the computation, but you don't have to worry about this, yeah? Okay. Okay, so, and then we also have, okay, these are the what we call exempt dividend, right? So that's why I say that there are different between tax under dividend, which under single tier that you should put as a final, and you also have dividend which is actually being exempted, yeah? The following dividend received by a person. So it doesn't has to be an individual. So company also is a person. So these are exempt from income tax. So if you look into all these things, all right, then you know that it's exempted. But if under normal circumstances, it's just mentioned a single tier dividend, that it should be a final dividend. So what are those dividend which are exempted if paid out of from a cooperative society? So if you have, remember koperasi, all right, have you heard of koperasi amanah or koperasi ahli ATM? So there's so many cooperative society. So cooperative society also paid out dividend to their shareholders, to their members, all right, panggil member, dia tak panggil shareholder, dia panggil member. So when the co-op pay out dividend to their members, so the dividend is exempted. So now then you say, okay, it's exempted, right? Dividend paid out of unit trust or so if you have a right unit, unit trust and property unit trust. Dividend paid of exempt income. All right. So later we look at if you have exempt income account in the case of venture capital companies, dividend paid of exempt income. So really, so what happened is that under single tier dividend, all right, the dividend is paid out of retained earnings, right? Later, when you do your tax 2, right, you see that companies, all right, they also have another account, we call it as an exempt income account. So how do they have this exempt income account? If the company goes under any tax incentive, it means that they may not have to pay tax on a certain income. So any income which is exempted from tax under tax incentive, the income goes into what we call exempt income account. And under this exempt income account, company can pay out dividend. And any dividend paid out of exempt income account is exempt dividend. Right? So this example here, exempt income account, which is arising from tax incentive enjoyed by companies. All right, so whenever any dividend paid out, so means that if a company is under tax incentive, then we have two sources of dividend. One is from retained earning, and they can also pay dividend out of their exempt income account. So any dividend paid out of exempt income account is exempted from tax. So that's why there's a difference between single tier is a final dividend, but exempt income means that you don't have to pay any tax on the dividend income. Again, exempt income account under from tax incentive. So this one is another tax incentive. Here we have the pioneer status though. So this one is under promotion of investment act. So we have the pioneer status ITA. And we also have tax incentive under section under Income Tax Act. For example, we have the reinvestment allowance, shipping incentive, incentive for offshore insurance. So there are a lot of incentive given to companies actually, yeah. So whenever the company goes under tax incentive, so the income is exempted, and means that whenever you have exempt income, then it goes into exempt account, and then you can pay out exempt dividend. And then you also have dividend paid out of tax exempt account again, arising from income received in Malaysia by a resident company. So remember that other than visa, any foreign source income will be tax exempt. So again, if you have tax exempt because you receive income from foreign, then you have exempt income account, and then you can distribute to the shareholders later. Again, you have exempt income account from chargeable income for which tax is waived for YA 2000. Remember, I mentioned in 2000 when we changed from the preceding year basis to a current year basis. So YA 2000 is given as a exempt dividend. Tax waiver year. So any income for YA 2000, you don't have to pay tax, right? So because you don't have to pay tax on the income that you receive in 2000, so that income goes into exempt income account. So because if you can pay out your dividend from your exempt income account, then the dividend is a tax exempt dividend. We also have dividend paid out of offshore company, Labuan offshore company, and dividend from company paying under single tier system. So this one that you mentioned just now lah, right? This one is generally, all right, all companies that is paid out of single tier system. Okay, shareholders company. We give incentives. So this one you have to understand, because later when you do your tax tax 2 later, we'll come back to this topic where we talk about the exempt dividend. So what happened here is that Malaysian government offers tax incentive to manufacturing companies, insurance companies, operational headquarters, venture capital, and many other types of companies. Yeah. So the amount of income which is exempted from income tax is allowed to be credited into an exempt income account. And then they say that you are given a 2-tier, right? From this exempt income account, the company can declare or give dividend to their shareholders. In the event the shareholder, which is a company, receive tax exempt dividend from an exempt income account, the dividend can be further credited into an exempt income account. So it means that whenever you receive any income which is exempted from tax, so that exempt income, whatever income that you receive which is exempted from tax, has to go into exempt account. From the exempt account, all right, you can declare dividend. So when you declare dividend from your exempt account, then the dividend is an exempt dividend, right? So we call it as a 2-tier because you can give the exempt dividend at 2-tier level, right? Remember that 2-tier you can declare exempt dividend. So what happened is that we have a company 1, all right, which is having an exempt income account, right? So this company have exempt income account. So because company, they have their shareholders. So when they have exempt income account, they may declare dividend to their shareholders. And if the shareholder happen to be a company, so it's very common that company invest in another company. All right. So if I have a company 1, all right, company 1, I have many shareholders. The shareholders could be individuals, the shareholder could be company as well. So if I pay out to shareholders, there's no issue because shareholder will not declare to other person because they just get the money, so that is their income. But if I declare to my shareholder who is a company, so we call it as a company 2, so I declare dividend which is exempt dividend to company 2. So company 2 receive exempt dividend means that they don't have to pay tax on the exempt dividend. So whatever dividend that they receive which is exempted goes into exempt account. So company 2 now have received dividend which is exempt dividend. So whatever amount that they receive will go into their exempt account. So this is what we call the first tier. Right? So whenever you get, for example, company B receive 10,000 ringgit from company 1 exempt dividend. So the 10,000 goes into exempt account. And company 2, because they have exempt account, they can declare another level of dividend to their shareholders. Alright, company 2 must have shareholders also. And their shareholders can be individual, the shareholder can be company. So if shareholders individual, no problem, settle. But if the company, the shareholders is a company, the dividend declared out of the exempt income again is an exempt dividend. And to company here, alright, if you have, for example, you have one tier, now you have the under tier. So this one tier, second, two tier, one tier, two tier. So when you declare to the shareholder, assuming that we have company 3 here, all right, you receive is again is an exempt dividend also. Yeah, because the dividend is paid off out of exempt account. But to company 3 here, so let's say that we have company 3, when you receive your you have company 3, right? So then if the shareholder here, company 3 receive the dividend, exempt dividend, of course the money goes into exempt account. But if company 3 declares to another company of the shareholders, all right, company 3 punya shareholders, now dah habis dah ada 3 tier, alright? So there's no more exempt dividend. Exempt dividend is only given for 2 tiers. Yeah, so means that if you receive dividend from company 1, then company 2 declared another level of dividend, so that is 2 tier already. So if a shareholder here, company 3 declare to another company, right, there's no more exempt dividend. Alright, so why is it so good about exempt dividend? Because you don't have to pay tax on the exempt dividend. Right, so that's why it's very important. Okay, shareholder will be very happy because now they have dividend from their retained earning, and now they also have dividend from the exempt account. Yeah. And finally, we have a financial instrument. It says that para 36 of the accounting standard require dividend payment on certain redeemable preference share to be treated as interest expense and shown in income statement. RB confirmed in MIA that the deemed interest expense would continue to be treated as dividend. So for income tax purpose, even though dividend or the dividend paid to shareholder will still be treated as a dividend for income tax purpose. But under IFRS 132, dividend paid to a redeemable preference shares is treated as interest expense. Alright, so that covers your dividend lah. So very easy je. Whenever you receive dividend, alright, whenever you have dividend income, then you just put it as exempted. That's it. Alright, so any question on this? Anyone? Any question on the dividend income? So very easy. Whenever you see dividend income, whether it's from Malaysia resident company or from a foreign source foreign company, then you put it as exempted. Very easy. Yeah, very easy. Faris, question? So now it means that in the computation, now you have your section 4B, which you have to go back, detail out 31A, B, C, D, E. So that is your 4B. All right, minus your deduction. Then you have adjusted income from your employment. And then if you're given dividend income, all right, whatever dividend could be Malaysia resident or from foreign source income, then it's exempted. Itu je. Right, you don't have to put any figures. It's just exempted. So it's very easy. It's a free marks whenever you have dividend. Alright, Stop recording.